Today was another wild day in the semiconductor market, and one of the biggest winners was SanDisk, trading under the ticker SNDK. The stock surged 11.64% today, closing at $588.73, making it one of the most talked about momentum names in the tech sector right now. In today's video, we'll take a deep dive into what's happening with SanDisk. We'll look at how the stock has performed recently, what drove today's big move, the longer-term growth driver behind this rally, what analysts think the stock could be worth, how its valuation looks today, and the key risks investors should keep in mind. Let's start with today's action. SNDK jumped 11.64% on March 9th, closing at $588.73 after a strong rebound in the memory semiconductor sector. This rally followed a sharp pullback in early March when the stock briefly dropped into the low $500 range. Today's move suggests buyers step back in aggressively, and the stock is showing signs of rebuilding momentum after that short-term correction. Now, let's put this move into perspective by looking at the stock's recent performance. SanDisk has been one of the most explosive stocks in the semiconductor industry since it became an independent company again. The stock was spun off from Western Digital in early 2025, allowing SanDisk to operate as a pure-play flash memory company. Since that spin-off, the stock has delivered extraordinary returns. Over the past year, SNDK has surged more than 1,050%, making it one of the best-performing semiconductor stocks in the market. In 2026 alone, the stock is already up roughly 148% year-to-date. In terms of volatility, the numbers are dramatic. The 52-week range spanned from $27.89 to $725. That high of $725 was reached on February 3rd, 2026. Compared with today's closing price of $588.73, the stock is currently trading about 18.8% below its 52-week high. Now let's talk about what specifically drove today's big jump. One of the biggest catalysts was a sector-wide rebound in memory stocks. Companies like Micron Technology and Western Digital also gained today after the entire memory sector experienced a sell-off last week. When investors rotate back into the space, volatile momentum names like SNDK often move the most. Another key factor is bullish analyst coverage. Several major firms, including UBS and Bernstein Research, recently issued aggressive price targets on the stock. Some of these targets go as high as $1,000 per share, based on expectations that demand for AI-related storage will continue to grow. There's also growing speculation about index inclusion. Investors are watching closely because SNDK could potentially be added to the Bloomberg 500 index around mid-March. If that happens, index funds and ETFs tracking that benchmark will be forced to buy the stock, which can create additional demand. Finally, there's been a surge in retail investor interest, especially across online trading communities like Wall Street Bets. When a stock with strong momentum starts trending in these communities, it can create additional short-term buying pressure. But the bigger story behind SanDisk isn't just today's move. It's the massive growth over the past year. The most important driver is the AI infrastructure boom. Training and running large AI models requires enormous amounts of high-speed data storage. Hyperscale data centers are rapidly expanding their storage capacity, and NAND flash memory is a critical component of that infrastructure. SanDisk is one of the major suppliers of 3D NAND flash memory used in enterprise solid-state drives for data centers. As demand for AI computing accelerates, storage demand has surged. Another major driver has been supply shortages in the memory market. Industry reports suggest global NAND supply has been tight, allowing companies like SanDisk to increase prices significantly. In recent quarters, the company saw average selling prices rise about 36%, while revenue jumped roughly 61% year over year. This pricing power has had a dramatic impact on profitability. In one recent quarter, adjusted earnings per share jumped from $1.22 to about $6.20, while operating margins expanded from roughly 30% to more than 50%. The company also benefits from its technology partnership with Kioxia, helping it maintain competitive manufacturing costs in the NAND market. All of these factors together have created what many analysts call an AI storage supercycle. So what do analysts think about the stock from here? Currently, Wall Street analysts generally rate SNDK as a moderate buy. The average 12-month price target is about $724, which would represent roughly 27% upside from today's price near $589. However, some analysts are far more bullish. Firms like Cantor Fitzgerald and UBS have issued aggressive projections. Their bullish scenarios assume that SanDisk could generate $90 to $100 in earnings per share by 2026, driven by sustained AI demand and tight supply in the memory market. Under those assumptions, some analysts believe the stock could reach around $1,000 per share within the next year or two. Looking further out, a few optimistic projections suggest the stock could approach $2,000 by 2028 if earnings continue to grow rapidly and the company trades at a premium semiconductor multiple. Now let's talk about valuation. After such a huge rally, SNDK is clearly no longer a cheap stock by traditional standards. But valuation in the semiconductor industry often depends on the earnings cycle. If the company can deliver around $90 to $100 in EPS in 2026, then today's price near $589 would imply a forward price-to-earnings ratio of roughly 6 to 7 times. On the surface, that might look inexpensive compared with other high-growth semiconductor companies. However, that valuation depends on one key assumption, that the current memory boom continues. Historically, the memory semiconductor industry is extremely cyclical, with shortages followed by oversupply and sharp price declines. Which brings us to the biggest risks investors should consider. First, the memory market is notoriously volatile. If NAND supply increases or demand slows, prices can fall quickly, which would directly impact SanDisk's margins and earnings. Second, the stock's extreme volatility is a risk in itself. The fact that SNDK has moved from under $30 to over $700 within a year shows how fast sentiment can swing. Third, there's execution risk. SanDisk's future growth depends on maintaining technological leadership in NAND flash and keeping production costs competitive against rivals like Samsung Electronics, SK Hynix, and Micron Technology. Finally, there's the broader AI investment cycle. If spending on AI infrastructure slows or data center demand weakens, that could reduce demand for enterprise storage. So in summary, SanDisk has become one of the most explosive stocks in the semiconductor market. The company is benefiting from AI-driven storage demand, tight NAND supply, and strong pricing power that has fueled extraordinary revenue growth, margin expansion, and one of the biggest stock rallies in the tech sector. But investors should also remember that the memory industry has always been highly cyclical, and stocks that rise as quickly can also experience significant volatility. Thanks for watching. If you found this analysis helpful, please like this video and subscribe to the channel for more deep dives into stocks, market trends, and investment opportunities.